Welcome back to the channel, folks. This is Jason, certified financial planner, host of Fighting Words Financial, and I'm going to talk about something today that I didn't think I would ever talk about on my channel, and that is options trading. But I'm going to do it from the perspective of a long-term buy and hold investor. And yes, you can use options as a long-term buy and hold investor. And I've been doing it for years, and I've been able to add alpha to my positions to the tune of 4 to 6% on top of the gains I'm already making, and I've been doing it for almost 2 decades now. And in this video, I'm going to kind of give you guys the baseline explanation of why I do it, how I do it, and then I'm going to create a series of videos where I kind of explain step by step what's going on, the reasons why I'm doing it. If you guys are interested in it, that would be great. If you like this kind of content, please subscribe to my channel, like this video, and I'm going to choose something with a metaverse theme right now in terms of a stock that I'm going to use as an example, just because that is a hot topic right now, but it's also something I'm supremely interested in because I view this as the next great sort of money platform in the internet, and I think that this is going to be where most of the wealth transfers from old internet companies to new internet companies. It's all going to be metaverse related. So let's dive into options. The reason that I have not covered options already is basically because the culture surrounding options trading is absolutely toxic. Now, I don't do a lot of options trading. What I do is a lot of options selling with the hope that these options expire out of the money, right? They don't always expire out of the money. I just did a video on that last week where I got hammered on Tesla, and that was all because of my own greed. Luckily, it was done in an IRA account, so it wasn't a giant taxable event because I've owned those shares since 2011. But I was able to get back into Tesla, and I have a little bit of a loss on there. When I say loss, I missed out on some gains, right? Anyway, back to using options as a long-term strategy and toxic culture. If you are going to sell options, you probably should not go to any of the user groups or Reddit threads or anything like that that talks about options trading. They are just going to encourage you to do something stupid. And I say that without qualification. I mean stupid. And I go through Wall Street bets all the time, and I look at the things that people are doing. I go to more reasonable threads all the time. I look at the things that people are doing, and they always get suckered into the same thing. And I even have gotten suckered into the same thing over time, trying to squeeze more and more and more premium out of something that you really don't want to buy or you really don't want to sell, right? So here it goes. Options for the long-term investor. I use them all the time. And particularly what I use is something called a cash covered put, or in my case, I use margin to do it, especially with a stock that I'm willing to hold in the super long term. And if I'm willing to hold that stock in the super long term, it also means that I actually want to buy it. So when I sell a cash secure put, it's generally not so far out of the money. It's never going to be exercised, right? So let me give you a concrete example right now. I want to own more Unity stock. I only own 100 shares. When the stock earlier this year dropped down to like $78 a share or something ridiculous like that, I just wasn't able to rearrange the cash that I had or the buying power that I had in order to purchase at that time. And now it's back up to $144 a share. I don't want to pay $144 a share because I want my break-even time in terms of tying up my buying power to be a lot closer than I think that $144 a share represents. I'm perfectly willing to pay $120 a share for it, right? I'd rather pay $100 a share, but I'm perfectly willing to pay $120 a share for Unity stock, largely because in terms of the metaverse, I think they're going to be one of the largest players. And there's a couple of platforms out there, guys. If you're not familiar with the metaverse, you can take a look at one of my metaverse videos that I made in the last couple of months. But Unity Software and Epic Games are some of the two biggest gaming platforms out there that have the easiest to use APIs that are going to attract the most amount of developers. Unity is public and Epic Games is not. Epic Games is also 40% owned by Tencent, so I assume that if you really wanted to, you could buy Tencent stock and participate in Epic Games that way. I don't want to do that for a number of different reasons that I could go to in another video, but I want to own more Unity stock. I just don't want to pay the current price. So what I've done is I've sold cash covered puts out at 30 and 45 days, and I've done a couple of those, right? What I'm basically saying is that I will sell you my obligation to buy 100 shares of Unity stock from you at $120 a share. The stock is not going anywhere right now but up, and it may not go anywhere but up for a while. But I do see that tech stocks are in a little bit of a bubble at this point, and that we may see kind of a mini smackdown here coming in the future. And I want to be in place to take advantage of that. And not only, if I'm wrong about that, I want to be paid for being wrong about that mini smackdown. What do I mean? What I mean is, I sold a couple of cash secured puts on this stock. I got paid premium. It was a couple $100. If I'm wrong about tech stocks in general getting smacked down, I still get paid for being wrong. I still get paid for thinking about owning Unity stock. And then that's kind of the strategy that I've used now. I really started using it about 6 years ago when I was very uncertain about a lot of the stocks that I wanted to invest in for my next 10 years. My first 10-year plan had sort of like come to fruition. And my next 10-year plan, I was really uncertain about a lot of the different technologies that I wanted to invest in. So I used cash secured puts to get into these positions at a cheaper and cheaper price. Now, once you own those stocks, I want to use something called the wheel strategy. But I'm using a wheel strategy where it's so unlikely that I end up losing these stocks because they get exercised, that I'm really only generating about half as much in the way of premiums a lot of options traders claim that they're making, right? So I'm doing about 0.5% per month per position rather than a full percent per month per position, which a lot of traders claim that they're making. I'm going to tell you right now that I don't really believe the claims. I don't really believe the claims because I've seen the data. I used to run the data all the time. I used to write programs based on the data all the time. And most options traders, most of the time, if you look over time, they end up losing money. The guys that make money are the ones that sell options that expire out of the money, right? That's the way to do it. Now, you don't necessarily want to do that with the cash secured puts because you do actually want to own the stock if you're a long-term investor. But in terms of a long-term investor, once you own the stock, if I'm selling a covered call, meaning that I'm selling you the right to buy a particular stock from me at a particular price, I don't necessarily want that to exercise unless I want to get out of that stock because I think it's reached the top. So let me give you an example. Like typically in my taxable account where I don't necessarily want to get out of Tesla stock, let's say Tesla is $1,000 a share today. I might do an option as short as a week, as short as 5 days. I'll sell a call at $1,400, and I'll sell a put at like $790. Both of those have basically a less than 5% chance of ending up in the money by the end of the week. The reason I got caught last week and I ended up having to sell some Teslas because I got greedier and greedier and greedier. Instead of being satisfied making $300 or $400 a week per option, I was making $1,800, $2,000 per week, on these options and thinking, well, maybe I'll just get lucky. And my luck ran out. I got exercised and the price shot through the roof and ended up missing out on some gains. So don't let greed get the better of you because that's all the stock market is. The stock market is a mechanism for transferring wealth from the extremely impatient to the patient. And I think that is something that Warren Buffett said. But the mechanism or that fuels that is fear and greed. And that is what you are doing when you sell options. I'm selling you a call option. I am taking advantage of your greed. It is extremely unlikely that if Tesla is $1,100 a share, if I sell an option at $1,400 and I collect $300 in premium on that, it's extremely unlikely that it's going to go up to $1,400 a share. But you're willing to pay me $300 for that, right? I'm actually happy to. I don't want to pay the taxes, but I'm happy to take some gains in that case if it goes up to $1,400 a share. I'm also going to sell you a put at a cash secured put or margin secured put in this case at $790 a share. I'm happy to sell that to you to take advantage of your fear because I'm happy to own Tesla at $790 a share. So that is really the whole motivation, all the factors considered in option selling is you are simply taking advantage of people's fear and greed. I don't do a ton of selling and repositioning of my options either. I tend to let them expire. I'm going to go a little bit more into the wheel strategy, which that's been covered ad nauseum, but I'm going to use some concrete examples of what I do with Tesla stock to generate a little bit of extra income, how I reinvest that, and I'm going to give you guys some concrete examples of what I'm doing here. And I know I'm kind of private, guys. I don't necessarily show my accounts to you like a lot of other people do. I'm going to do this in this case, or at least I'll show you screenshots of those accounts, how I'm reading through the options chain, where I'm making my decisions. We'll talk a little bit about the analyticals, the Greeks, like the deltas, the thetas, what all that means. And I'll talk to you about the time period in generally and how I make my, how I sell my cash secured puts, when I don't really want to buy something, when I do really want to buy something, and how I arrange things based on delta to, to basically ensure that if I really want to buy it, eventually I'm going to buy it. And if I really don't want to sell it, then I'm probably not going to sell it. Anyway, look for more updates. I know this was kind of long-winded for a Sunday. I'm just talking at the camera today. But check out the description, goodies below. If you guys want to talk more about options or talk more about EVs in particular, the metaverse, join my Patreon. There's actually a really lively discussion right now with cryptocurrency in there, and we have some real experts when it comes to cryptocurrency in my Patreon. It's pretty small right now, but hopefully that's going to grow. I'd love to see you guys there. Thank you very much. Have a nice day.